Hello and welcome to another financial analysis video. Today I'm talking about Wells Fargo, which reported its third quarter earnings, and they met expectations at $1.05 a share. And Wells Fargo is really good at meeting analyst consensus, or maybe I should say analyst consensus is really good at predicting how Wells Fargo does. But as you can see, this has been a quality bank even through the financial crisis, and earnings have really built up over the last couple of years. Quarter to quarter, the steam on trailing 12-month earnings has started to come down, but it has started to come back a little bit, so it's not a total wash. One of the things, though, that is sort of bizarre to me, and I'm going to take a look at leverage here real quick because I want to see, no dramatic moves in equity, but to be building revenue about 1% on a trailing 12-month basis and to be losing return on equity is sort of a mixed thing for me. But 11% return on equity, if we compare that to the big banks in the S&P 500, U.S. Bank is the only bank that is currently performing better, and that is a second quarter number, folks, so we don't even know. We'll wait till their earnings come in to see if it's actually better or not. So Wells Fargo on a return on equity basis is really performing well, and the return on equity is good if a bank is trading at book value. It kind of gives the investor somewhat of an idea as to what types of returns that they can expect. Let's have a look here too, because another thing, and this is just earnings yield in the industry, seems to be around 8% for big banks. The higher return on equity that Wells Fargo has is what's leading to the price to book ratio being so much higher, in my opinion, than the rest of the big banks. But I think with the recent correction and some of the concerns, I think Wells Fargo is a good investment here, because as you could see, the correction really didn't hurt earnings. They're still there, they're still solid, and going forward, they're trading at 10 times the next 12 months earnings of Q3 2017 through Q2 of 2018, and really a lot of earnings growth expected over the next couple of years. I mean, jumping from our most recent four-quarter estimate ahead 2 years, you see almost a 20% increase in earnings. So there's a lot to like about Wells Fargo. I would keep my eye on, and keep in mind I do not have the cash flow information, but I'd keep my eye on that revenue number and to see if they continue to improve the revenue, if they can also continue to improve EPS with it. I mean, that's my only solid loss here, is that you had revenue growth, but you had not earnings, but return on equity kind of get a little sluggish. Otherwise, holding Wells Fargo is a pretty decent idea. They've got a decent dividend too that's approaching 3%, and expect them to increase that in the near future. There's no reason for them not to. I hope you enjoyed this video. Happy investing.